You planned perfectly by buying a long-term care insurance policy, but now your premiums have become incredibly pricey. Are your only options to keep on paying those ever higher prices or to leave your policy and lose what you paid into it? Jim Lineweaver has another idea. Jim is a certified financial planner professional with the Lineweaver Financial Group. Welcome back to the show.
Good to see you.
Yeah, long-term care insurance seemed like a good idea at the time.
It did, yes. I mean, when you look back at all the statistics, and as everybody was getting older and having these huge either assisted living facility stays or nursing home stays and just devastating people's retirement, people were proactive and they went out and they bought a traditional long-term care policy.
Right.
But unfortunately, what you're seeing the last few years is the insurance companies have kind of missed the pricing on these over time. And unfortunately, they're seeing increases anywhere from 50 to 60%.
Wow.
And that you could just go ahead and pay, or you're going to have to adjust the premiums to try to compensate for that.
So why did the premiums go through the roof?
Well, people are living longer, so the good thing is that there's been advancements in medicine to keep people alive, but unfortunately there hasn't been a lot of treatment to get people really healthy to get them back out of the facilities. Okay, so you got longevity issues. It's almost a little bit of a perfect storm because there's been very low interest rates for a long period of time, so the actual return on the insurance company's assets are lower than expected. You know, things like Alzheimer's and stuff are keeping people around longer, and it really provides for a lot of unfortunate claims that are being paid out there. I mean, they're very very required by the insurance companies to pay them and everything, but they also have to stay solvent. So the states, when they look at these premium increases, have to say, what's the interest of the underlying policyholder versus can the insurance company stay solvent to keep paying those premiums, and that's where the problems come in.
Wow, yeah. So our options: keep paying, or cut back on your benefits, or drop the policy, but you have something else that you have in mind.
I do. With these ever-increasing costs, and it doesn't seem like they're going to end anytime soon, what more companies have done recently is they've combined life insurance with long-term care together. So this way, no matter what you're paying in at some point in time, you know you're going to get something back, because worst-case scenario, you're going to actually get the death benefit for the family, but it's a way that you can actually kind of be a little more predictable and make sure that the care is going to be there if you need it down the road.
Okay, you got an example of how that works, correct?
I do, yes. So we looked at a 65-year-old male, and if he had a $100,000 lump sum payment into a contract like this, if he became needing to at least 2 activities of daily living, then he could get about $4,900 a month for long-term care for up to 6 years, so it's a good long-term payment. And if they didn't use any long-term care, he'd get about $148,000 death benefit whenever he would pass. And also then, if no long-term care was needed and you just wanted your money back, well, then you're going to get 80 cents or 80% back on the dollar that you spent.
Not too bad.
No, it's not. And then for females, what ends up happening is they would actually get a $4,300 a month long-term care benefit, or $164,000 death benefit for somebody at the same age of 65.
Okay, but what if you didn't want to have that big upfront payment?
Yeah, what you can do is some of these you can actually pay in a monthly or annual installments, okay, so it can work that way. But also there's life insurance policies out there that put on a chronic illness rider. And what that basically is going to be 2% of your death benefit. It can be paid out on a monthly basis, and then that can help pay for your long-term care to a maximum daily benefit of $340. But what you're also looking at is about a 10 to 12% addition to the annual premiums that you would normally pay. Okay. At least this way you can lock in some of the premiums, a little more predictable, and guaranteed one way or another to get your money back, so it's just not lost.
So there's options.
There is.
Long-term care costs can be catastrophic to your retirement savings, but there are affordable options to properly plan for this, at this point, very likely phase of life. To find out more, give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net. Next.